Crypto is a way for you to sidestep some of the negative impacts of austerity. And austerity is not uniformly distributed in terms of its pain, right? The people who have the most pain are those who have the most assets because the cash flows are depreciated under austerity. There's no more government printing press that's making these things go up in value. So if you did the thing that what you were told to do, get on the hamster wheel, work your ass off, and you were able to, through hard work, build up a fiat nest egg, and you recognize that this situation is untenable in terms of, a very small slice of the population getting very, very wealthy while everyone else is suffering, then it behooves you to get out of those fiat assets. Now, previously, there wasn't really an easy way to do that, but now we have crypto.
The grand fiat Ponzi scheme is collapsing right before our eyes, buckling under the immense weight of decades of ill-advised decisions and reckless policies by governments, central banks, and other custodians of the system. Numerous prominent investors, economists, macro analysts, and financial experts warn that the world teeters on the brink of another global financial system meltdown, compelling decision-makers to confront tough choices or witness chaos reign. Regarding the colossal debt burden, experts contend that central banks face three options: persist in printing money until an inevitable collapse, significantly boost productivity to markedly surpass the debt load, or implement austerity measures by drastically slashing expenditures. During a recent discussion with popular YouTuber Tom Bilyeu, Arthur Hayes, BitMEX founder and former CEO, contends that an austerity program is not only advisable, especially for developed economies like the United States, but also achievable. He points to Argentina, where President Javier Milei is currently implementing one of the most rigorous restructuring efforts in decades, as a model. Arthur suggests that the US could follow suit before the situation spirals out of control, but doing so necessitates voters making tough decisions. If a global financial reset proves effective, Arthur indicates a potential overhaul of his outlook on Bitcoin and other cryptocurrencies.
How many times have you eaten junk this week? You're just wasting your money. Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. Skip your next junk meal and instead invest in your education. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The debt has been taken. There's been unproductive activity. And this is the global thing, right? Global debt to GDP is, I think, 360% per the World Bank or something like that. And it's been accelerating over the past 2 decades, right? So there is an implicit deadweight loss in the system. The question is who bears the loss? Now, that's what every government is tackling. What does every government do? They push that loss down onto the people themselves via an inflation tax. But the loss has to be paid. It's not like the Argentinian situation is without losses. People are going to lose money in austerity, right? The question is who loses the money. So if it's, I don't like austerity because deflation destroys the banking system, well, in a capitalist society, what happens when a bank goes bankrupt? The unsecured creditors take over the bank. So put CEOs of Citibank and JP Morgan and Goldman Sachs and Morgan Stanley on the street after 2008 and give the bank to the depositors. That's how bankruptcy law should work. It didn't work in that situation. They would rather save the managers of the banks than allow the people who are unsecured creditors of the bank take it over and run it how they think it should be run. So I think we being a lot of capitalistic systems, and even in China, they have these sorts of bankruptcy sort of laws. It's just that nobody wants to use them because it's going to disenfranchise the elites. We have all the tools available to us. We've thought about these things. We're just unwilling to use them because of who bears the pain. So that's the situation. But I think when more people realize the reason why crypto exists, crypto is valuable because we're unwilling to take these losses. If all of a sudden the United States and China and Europe and Japan said, we're going to run balanced budgets, we're going to cut out 75% of all these government services, I would be thinking hard about whether I want to be long crypto at that point. And maybe I should be doing something else because the societal mindset has changed to something more responsible. And maybe we're not going to see these massive price gains in crypto because the fiat debasement part of the equation has ceased. Who owns the bonds? Rich people and banks. So that's who suffers. If who's making all these, the U.S. Treasury spends about $1 trillion on an annualized basis in interest payments. Who is getting these interest payments? All the motherfuckers out at the ski resort who now get 5.5% on their cash. And great. I own these trophy bonds, I'm getting 5.5%. I've got a good capital base. I'm going to go enjoy the world, right? It's all the rich people who own these financial assets. They're now worth a lot less in a deflationary environment. The primary one being government bonds, who now the government's, oh, we're going to balance the budget. And guess what? All that debt, we're just going to gone. I mean, you can do it. Debt jubilee. It's happened in the past. Study the Roman Empire and, Greek Solon and certain people. Like, it's a feature of the society where a leader comes and says, this is not a good idea for the rich to be rentiers on the entire productive capacity of society. Let's destroy that asset that they have and re-equalize system. We forget that this happens, but it has happened in the past. And so if we did something akin to a debt jubilee, who loses? Rich people. And then at some point, if the government does float another bond with a more balanced budget, then, that might be a good investment at a very high rate of return. Is that better than owning something that has made its gains in fiat terms? I'm not saying that the Bitcoin network is not valuable. I separate Bitcoin into technology plus liquidity. But if you remove the liquidity piece, what's the technology worth? I don't know. It's worth a lot for sure. But removing that liquidity piece from the equation for crypto probably means that it corrects quite substantially. And you'd want to own other types of assets now that, we have, society has decided that we're going to run our public affairs in a different manner.
The argument for austerity has been raised repeatedly in the past, yet it has become increasingly evident over the years that no U.S. politician, be they Republican or Democrat, will jeopardize their career by proposing such measures. Despite the urgency of the situation, the closest any official has come to acknowledging the issue was Federal Reserve Chair Jerome Powell, who admitted in a 60 Minutes interview that the national debt is unsustainable, outpacing economic growth. However, even his statement failed to fully grasp the urgency of the situation. Other officials have simply reiterated that the economy is robust and resilient, aiming to sustain market buoyancy as they always have. Arthur acknowledges the feasibility of scaling back, but he recognizes that such actions would significantly impact the wealthy and powerful. This, he argues, is precisely why the government will never entertain the idea. Decades of policies have consistently enriched and empowered the elites, leaving little reason to believe they will change course and defy their benefactors. Regardless of how events unfold, Arthur remains confident that cryptocurrencies will safeguard and preserve wealth as long as the fiat system persists on its current trajectory.
Crypto is a way for you to sidestep some of the negative impacts of austerity. And austerity is not uniformly distributed in terms of its pain, right? The people who have the most pain are those who have the most assets, because the cash flows are depreciated under austerity. There's no more government printing press that's making these things go up in value. So if you did the thing that what you're told to do, get on the hamster wheel, work your ass off, and you were able to, through hard work, build up a fiat nest egg, and you recognize that this situation is untenable, a very small slice of the population getting very, very wealthy while everyone else is suffering, then it behooves you to get out of those fiat assets. Now, previously, there wasn't really an easy way to do that, but now we have crypto. So now if you have fiat assets that are, your saving vehicles, or even just the little bit of fiat money that you're able to save, you can now sidestep. You can vote for austerity to rebuild your society into a more equitable situation, but at the same time preserve the little bit of wealth that you've been able to accumulate in the fiat system by porting it over to crypto. And then, once things have reset, then reevaluating, okay, well, maybe I am okay with owning a government bond that yields 10% if the economy is growing at 5%. That's a great return for me. I don't need to have this crypto thing. Maybe it's too volatile for me. Maybe I lost a little bit of money trading some particular coin. I just want to own some sort of bond in a government that I believe in and respect. Cool. Now, you're getting paid to take that risk, versus now you're not getting paid appropriately to take that risk. That is sort of the mental process. Is there obscene things going on in crypto, and are they out of whack with sort of like the macro narrative? And I'm really focused on how much fiat liquidity there is there in the world, because to forecast how useful the technology is from a fundamental basis is just very, very difficult. I think a lot of the returns are usually driven by fiat debasement rather than Bitcoin or Ethereum or any of these other cryptos are massive networks, because to be fair, there's only a few million people, if that, who use these things right now for anything other than just, I don't know, sending money between their different exchange accounts. So that's sort of my mental worldview. Now, that was 2021. What does this cycle look like? I think this cycle is a cycle where we break the sovereign debt markets, where every single major country finally admits that we will do anything it takes to make sure that the government does not go bankrupt. And so we're going to remove all this pretense about caring about sound money, and we're just going to start printing money like it's going out of style. And so I think this cycle is going to be a bit different than the last cycle, where the Fed and then every other central bank said, oh, we've overdone it. Let's try to reduce it. They tried, but the governments are still printing money because they need to get reelected. And we're in an inflationary environment. There's too many old people. Everyone's going to go to war at some point. So everyone's beefing up on defense. And so the central banks have come back in and said, okay, we got to print money, but we can't really call it quantitative easing or the things that we called it before. So we'll make up new names for it. But it's the same thing. And so we want to protect the government bond market and make sure the government can continue to borrow at below the economic growth that they're creating. And so I think right now we're in this cycle where people are realizing this, and you have the professional investor class are also realizing it because they've had the worst bond performance, at least in the United States, since the War of 1812. Over the last 3 years, U.S. Treasuries, 30-year Treasury is down 50% on a real basis. That is the worst return since 1812. Now, you wouldn't know that by listening to the financial press, but bond investors are getting absolutely eviscerated. And as they come to the realization that this is not good, maybe we should own something else, that's sort of this secular rise and sort of Bitcoin.
Arthur's discussion on the significance of Bitcoin within the crypto sphere brings to light one of Greg Foss's notable statements regarding Bitcoin's role as the ultimate insurance against the looming fiat Ponzi scheme. In times of crisis, Bitcoin serves as a bulwark against fiat currency devaluation, safeguarding and potentially augmenting wealth over time. Share your thoughts on Arthur Hayes' interview in the comments below. Do you believe that the US and other developed economies could implement an austerity program, even if it means significant ramifications for the affluent and influential? Drop your insights and observations in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.